Welcome to the TRADER24 studios for your daily financial update on the global markets. The U.S. Senate's decision to fund the technology sector with $280 billion combined with the reassuring words of Fed Chairman Jerome Powell sent optimism soaring, leading Wall Street to unexpected gains at a time when it really needed it. The U.S. now officially has a benchmark interest rate of 2.25% to 2.50% after the second consecutive record increase of 75 basis points. And even though the date has now reached pre-pandemic levels, when former President Janet Yellen was trying to correct macroeconomic indicators and saw 14-year highs, the market seems to have anticipated it and wasn't surprised. Moreover, the burdensome, traditionally high benchmark interest rate has already led to losses in equity markets, with the S&P 500 already down around 800 points, with the dollar having seen 20-year highs with a persistent appreciation of recent months. And on top of that, the Senate gave a positive vote to the long interesting fund for the technology companies, with a main focus on semiconductors. And beyond the specificity of the issue and the obvious positive impact on the companies concerned, the action suggests that despite the central bank's lifting of the liquidity provision, policymakers are continuing to show diligence in funding while trying to defend themselves from the recessionary storm that it is foreseen. In other respects, in commodities, the mismatch of dangerously high energy costs and suspension of market commodities continues in the shadow of an endless war, with the new Russian attack on the port of Odessa setting back hopes of unblocking the safe paths for transporting wheat and other priority products through the Black Sea. Recessionary fears are well and truly in place, with firms continuing to cut economic growth forecasts, while the IMF also revised negatively to 3.2% instead of 3.6% in April, weighing on sentiment, with rain of corporate results continuing. The US dollar remains at 20-year highs, the freight market remains depressed, reflecting the likelihood of a slowdown in economic growth, and the government bond market is trying to find its footing in a context of investment uncertainty. You're watching the TRADER24 Daily Global Market Overview. Let's take a closer look at the situation. On Wall Street, buyers partied, especially after the Federal Reserve's announcement, with the major indices moving aggressively higher towards the close, posting strong gains with high trading activity. Indicative of the optimism was that all of the key S&P 500, Dow Jones and Nasdaq indices closed with gains, while a total of 69 of the 496 large cap, 9 industrials, and 8 of the 102 technology indices closed negative, 96% of them with losses of less than 1%. The New York Stock Exchange Index closed positive at plus 1.61%, hitting the 15,000 points that had been aiming for 6 weeks. The small cap was strongly affected, with the Russell 2000 closing at 2.39%, while the VIX Risk Index also lost 5.27 percentage points. S&P sectors closed positive, with telecoms at plus 5.11% and technology at plus 4.29%, recording the largest positive signs. And Google, Alphabet at plus 7.74% and Enphase at plus 17.89%, outperforming respectively. The main positive protagonists in the large cap were, apart from the aforementioned Enphase, Chipotle at plus 14.70% and PayPal at plus 12.18%, while in the small cap, Zena at plus 46.12% and Cryptide at plus 43.70%, while among the tech stocks, 1/3 of them saw new weekly highs. Finally, in the industrial Dow Jones, only 9 out of 30 closed in negative territory, with all eyes, of course, on Microsoft, which outperformed again with a 6.69% gain thanks to good second quarter financial results. In the pre-market now, most listed companies are moving tepidly corrective in an attempt to absorb yesterday's rally, with the Chicago futures giving a bearish opening. Asian markets closed slightly upwards. The Hang Seng closed close to unchanged and failed to recover after yesterday's minus 1.53%, weighed down by the IMF's revision of China's economic growth rate to 3.3% instead of 4.4%. Shanghai and Shenzhen gained 0.6% and 0.7% respectively. Japan's Nikkei saw a controlled gain of 0.36%, and the Australian 200 continued its month high with a small gain of 0.50%. Europe's markets were unchanged under the weight of waiting for the Fed's decisions and negative forecasts for the change in the GDP of European countries, and timing did not allow for outperformance. The critical Italian political issue opened by Mario Draghi's resignation remains open, while the ECB has already joined the war of hikes with the first interest rate increase in 11 years. Schneider shares are currently seeing the biggest gains at plus 4.14%, while Airbus at minus 6% and Total Energies at minus 3% are moving heavily. In Athens Stock Exchange, Greece is marginally positive at plus 0.30% in the general and 25 large cap indices, with the banking sector at 0.6%, while turnover remains extremely low for another session. In U.S. Treasuries, there was little change, with investors leaving the U.S. 10-year yield well off the local highs at 2.79%, the critical 6-month low. The 30-year is in the 3% zone. The spread has opened dangerously at 24 basis points in favor of the 2-year, and obviously the volatility in the coming days will be high. In Europe, the yield of the German bond was depressed to 0.97%. The spread of the Greek is at 209 basis points, the Treasury spread at 184 basis points, and the gilt spread at 100 basis points. Still air prevailed in the forex market as the mighty US dollar was unchanged with bearish sentiment, with the dollar DX index retreating to 106 and the last supports, while the exchange rate with the euro remains in the region of 1.02. The pound remains above 1.20, the yen depreciated heavily, seeing 135 per dollar, a 1-month low, and the Canadian dollar continued to appreciate towards 1.28 per US dollar. In commodities, general indices gained an average of 1.38%, with those of metals outperforming, silver at 4.11%, palladium at plus 3.45%, and alumina at plus 1.91%, while in agribusiness, wheat and soybeans were the winners, with the latter reacting from 8-month lows at $16 per bushel. Only cotton and coffee have a positive sign, while the aforementioned wheat loses almost 14% in the month, despite yesterday's positive session, mainly related to the Russian skirmishes in the port of Odessa. In energy, there remains the interesting wide divergence between Brent and crude, with the Brent now around plus $10 per barrel, which occurs when volatility is about to increase excessively. Crude oil continued to hover below $100 and at 3-month lows, while Brent closed positive at $108, with the fears that the Fed's monetary policy will strangle economic growth. Finally, in the freight market, the Baltic closed negative again by 2.6% ahead of the risk of a severe recession in the coming period, and in fact it still remains to lose 50% of its price in only a few months, being at a 2-week low. Individually, Capesize lost 5% to new monthly lows, and Panamax and Supramax were unchanged. In terms of economic releases, today's focus is on the latest quarterly GDP results for the US, with forecasts pointing to it returning to a positive territory at the 0.5% level. Yesterday, the U.S. Federal Reserve announced a further 75 basis points increase in interest rates to 2.5%, while earlier in the day, the U.S. crude oil inventories were announced, which fell by 4.5 million barrels. In terms of corporate announcements, today we expect the financial results of Apple with projected earnings per share of $1.16 and revenue of $82.59 billion, Amazon with projected earnings per share of $0.1279 and revenue of $119.18 billion, and MasterCard with projected earnings per share of $2.35 and revenue of $5.26 billion. Also set for today is Morgan Stanley's dividend ex-date with a yield of 3.76%, up 22.6% year over year. Yesterday, financial results were announced by Meta Platforms with earnings per share of $2.46 and revenue of $28.82 billion, both below forecasts. Qualcomm with earnings per share of $2.96 and revenue of $10.93 billion, both above forecasts, and T-Mobile with earnings per share of $0.1697 and revenue of $19.7 billion, both below forecasts. The 0.75% rate hike, which investors had anticipated thanks to Fed Director Christopher Waller's statement 2 weeks ago, sent the cryptocurrency market in most cases into double-digit rises immediately after the announcement by Fed Chairman Jerome Powell. The Bitcoin, which has been hovering in the 21,000 to 23,000 range for the past few days, shot up over 10% immediately after the announcement, breaking the $23,000 barrier again. Ethereum respectively returned to the $1,600 area, rising as much as 16% at one point. This increase seems to have been aided by the 10th shadow fork test that took place yesterday as part of the network's preparation for the upcoming merge from proof of work to proof of stake network. The altcoins, of course, could not miss the party and are making gains that bring them close to the highs of the previous days, such as Polygon's Matic at $0.87 with a plus 7.83%, Polkadot's DOT at $7.60 with a plus 11.4%, and ApeCoin's Ape at $6.69 with a plus 14.41%, while Uniswap's Uni is seeing highs not since late April at $8.18 at plus 21.2%, and Optimism's OP respectively since early June at $1.10 with a plus 31.09%. Thank you for joining us today. It was the Trader24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.